afternoon. I thank everyone to join our third quarter results call. Straight away I'll go to financials. During the quarter, our total revenue for the company grew by 8% to 1,631 crores. EBITDA also moved up and is 269 crore, which is 16.5% of sales, and net profit grew by 48% to 180 crores. During 9 months period, the cumulative up to December 2023, our revenue grew 11% to 4,712 crores. EBITDA is 697 crore, which is 15% of sales, and grew by 22%. Net profit is 438 crores. It grew by 42% versus YOY. Before considering non-recurring items of corresponding period, EBITDA and net profit are not exactly comparable with the previous year's corresponding number, as almost 64 crores and 180 crores of cash expenses and 14 and 37 crores of depreciation has been expensed out in Q3 and 9 months respectively for new manufacturing facilities, which were, you are aware, earlier capitalized. So from 1st of January 2023 onwards, we have started charging of all expense to P&L. Our gross margin stayed at around 70%, which is healthy. EPS for the quarter before non-recurring items is 9.18 per share versus 6.76 in the corresponding period last year. Cash flow and borrowings. The company generated a healthy cash flow of 652 crore over 9 months period, December 2023. After meeting its capex as well as working capital requirement, net cash inflow was 309 crore, which was used in paying dividend and repayment of borrowings. The gross borrowing is reduced to 575 crores as compared to 686 crore on December 22. The company has about 156 crores of cash in hand versus 146 crores last year same period. I will now hand over the call to Pranav for discussing both India business and the international journey.
Thank you, Mr. Baheti. Despite the muted demand in the antibiotics and respiratory market, the India business grew by 9% to 596 crores. The specialty therapies performed better than the market. Gynecology, gastro, anti-diabetic, and ophthalmology therapies outpaced the market growth. We performed relatively better than the market in antibiotic and respiratory segments on a higher base in the previous year, Q3. New launches continue to do well, with promising future launches across these segments. Animal health had a fantastic quarter, and this is a business that's been doing very well for us. It grew by 32% during the quarter. Coming to the international business, we had a very satisfactory quarter with exceptional growth in the ex-US generics. The US business also grew 9% on the back of 11 launches. The US business is looking at a better wicket right now with new facilities already commercialized. As they ramp up, we will get a lot of operating leverage, and cost improvements are also on track. There is no further large capex needed for the international business, and we will have only maintenance capex, as well as some API expansion, including in therapies such as GLP-1 and debottlenecking. The API business has been very strong for us over the last couple of years. The degrowth this quarter was due to lower offtake from a few select customers, hence it's looking lumpy. I expect another quarter or two may be weaker, and then I think we should be back to our regular growth rate that we've demonstrated in the past. R&D expense was at 7% of sales at 114 crores for the quarter. As we've been saying in the calls the last couple of years, our goal was to bring this down, and we are constantly optimizing this, and improvements are on track. We filed 5 ANDAs during the quarter and cumulatively ANDA filings at 257. We also received 7 approvals and launched 11 products. We should launch over 5 products in the next quarter as well. The US generics business grew 9% to 474 crores for the quarter. The ex-US grew by 32% to 272 crores, and the API business grew by 11% to 289 crores. With that, I would like to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good set of numbers. One question on the other expenses, excluding the R&D, other expenses was pretty low. And my assumption is that last time you all said that, 60 to 70 crores we are already expending new facility costs. So is there any one-off included in this, or it is basically because of the cost improvement program? And what are those cost improvement programs and whether this number will be sustainable or not in the future?
So, I'm taking this. So, I didn't understand your exact numbers, but I think what we have said is R&D, we have said we'll keep it at around 500 crores or so for the year, and we are on track. We have already started charging off all the expenses from new facilities, which were earlier being capitalized. And numbers are in line, and I think they are the number which somebody can take the base.
Okay. And in your US business, what kind of price erosion we are seeing? Whether, we have already done 20 launches in 9 months, and I think that was the guidance. Any more launches are we expecting in quarter 4?
Yeah, so 2, 3 things. One, it's tough to say on the price erosion in the market because it's a factor of multiple products. Generally, it is a little lower than what we had last year, but it still exists. It's product to product. It can range anywhere between 5% to 50% depending on the incumbent who comes into the market. But it's a little better, so we don't comment on. It's very tough to give a number for the price erosion. As regards new launches, yes, I think we will continue doing it. And then my opening statement, I said that we will launch about at least 5 products in the fourth quarter as well.
So how many products? Sorry, I did not get it.
5 products, at least 5.
5 products, okay. And what is the guidance for FY25, for the launches?
We haven't given a guidance, but I expect at least 10 to 15 launches.
10 to 15 launches. And last question is on tax rate. What should we take it for this year? Because we are 9 months, because of the deferred tax, the tax rate has come down. So if you can give that, and what should we take it for next 2 years?
So tax is computed number on profit for the purpose of taxation. So I think we'll get some coverage on impairment losses, etc. And that's how the tax rate is low.
Sir, any number would you like to share for FY25? Is it that we should take 17-18% in FY25?
I think so. Yeah, that's right.
The normalized tax rate, right?
Correct.
Okay, sir. Thank you. That's it from my side.
Thank you. Just a reminder to all the participants, you may please press star and 1 to join the question queue. The next question is from the line of Damayanti Kerai from HSBC Securities and Capital Markets India Private Limited. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. My question is again on R&D. So, looking at 9 months number, you are very much in line with your, earlier guidance of 500 crore or below. So, how should we look at your R&D approach ahead? Because obviously you are optimizing R&D costs, but how do you build up pipeline for US? And you can also talk about the kind of products where you are spending majority of your R&D focus as of now.
Yeah, so if you see a broad R&D spend, right, I think what has happened is we don't give a segment-wise breakup, but as I can give a flavor of where we are and where we intend to be. So I think about 5-7 years back, it was only OSD. As you went in today, if you look at it, you have OSD, you have the API side, the chemistry bit, you have injectables, derm, you have ophthalmic. These are the broad areas that we are spending on. What's happening is OSD as a percentage of the total mix has come down. Derm has come down because derm was a portfolio that we had to do. We've done a bulk of that portfolio, so derm has come down quite a bit. So those are the two areas where we've seen a reduction. Where we've seen either flat or gentle increases on the chemistry side and the injectables as we build up a more portfolio of injectables. And injectables will continue growing moving forward, injectables and ophthalmic.
Okay, so OSD, derm, as you said, has come down in a way that you're trimming or optimizing costs here and spending more on newer growth areas like injectables. So as of now, can you just give us some indication, say, out of 100, how much is derm plus OSD as a part of your pipeline, and how much is the newer growth?
So as I said, we don't give this breakup, because it keeps changing. And it gets lumpy also, so we don't give this breakup of segment-wise R&D spend.
Okay. And Pranav, did you mention in your opening remarks that you are focusing on, or you're working on GLP-1 drugs also? If yes, can you comment a bit more about it?
Yes. So I think that's an interesting area that is there. The P4, the launches are still a little away, but these are interesting APIs and formulations. We've got peptide capability as well. So hence we're looking at entering this segment. We'll start with it so we can get some of the filings done, and we'll see how it goes.
Sorry, filings you haven't started, like it's in development right now, but you are targeting most of the opportunities. Yeah. Okay, and my second question is on your utilization on the newer plants. So in your press release, saying like you will be seeing better pickup or better supplies from the new plants in coming quarters. So like how much you have covered the space so far in terms of utilization for new plants?
So utilization still, okay, again you have to peel through the layers to see the utilization. In certain areas we are doing pretty okay. In certain areas, okay, bulk of them we're quite low, and we'll pick up as we go along. The way I anticipate it is ophthalmic we should be near like practical, what is a good capacity utilization in another 6 months. Our vial line should be okay in another 6 months. On the oncology side, we're seeing good pickup on oncology injectable side, we're seeing good pickup. And the two areas where we will have some capacity, which will take a little longer, but that's okay. That's just the nature of the business because these are later expiring products, is on the OSD side of the oncology and on the PFS side of the injectables.
Sorry, which part of injectables? I didn't get.
On the PFS, pre-filled.
Pre-filled. Okay, got it.
Yeah, as a capacity utilization. There's some products which will more than take care of that cost if we get those launches, but on the capacity utilization I was talking about.
Okay, and for next year, you said 10 to 15 launches in the U.S. So I assume with these kind of launches, like 25 this year, if you do like another 5 in fourth quarter, and then in 25 you're targeting 10 to 15. So that should be reasonably picking up your plant utilization, right?
Yes, absolutely. I think what's happened with launches this year, as we gradually get market share, and with the new launches that come in next year, will help with the. Apart from this, we also have some CMO opportunities we're pursuing for some of the lines, so those will also help with the plant utilization.
Okay, that's helpful. Thank you, Pranav. Thanks for your answer.
Thank you. Participants may press star and 1 to ask a question. The next question is from the line of Anushka Vora from Vimana Capital. Please go ahead.
Yes. Hi, sir. Congratulations for the good set of numbers, and thank you for this opportunity. So I had a couple of questions. I've just recently started tracking the company, and I had a couple of questions. The first one was, amongst all your geographies, will the ex-US be a major growth area going forward?
Yeah, so the ex-US, we have a little different strategy. And if you see the last few years, I think the last 5 years, I believe our CAGR is about 15%. So we've been growing pretty well in these territories. I think the large territories that we participate in, or we participate through partners, is Europe, Canada, Australia, Brazil, South Africa. These are the big ones that we do. And I think we've done pretty well in that, and I think that will continue growing as a territory.
Okay, thank you, sir. That was very helpful. And my second question is around the API business. So, how is our API business performing from realization and a margin point of view? And how do we see this realization going ahead? Is it majorly going to be volume driven?
So the API business has been a pretty good business for us. I believe the last 4-5 years, if you look at it, the CAGR must be about 8 to 10%. So it's slowly and steadily growing. We have a very good quality of API business. And that I mean is we have a good bunch of customers all over the world that we've done pretty well. I anticipate moving forward, this business will also continue growing. I think a quarter or two may be a little slower because we had some big business which is a little lumpy, which comes once every 3, 4, 5 quarters. And that's what causes a big bump. So I think maybe that won't be there. So hence a quarter or two may be a little lower, and we'll start increasing it again. API business is a good margin business for us. It's a decent decent margin for us.
Okay, sure. Thank you so much, sir. This is very helpful. All the best.
Thank you.
Thank you. The next question is from the line of Chirag Dagli from DSP Mutual Funds. Please go ahead.
Yeah, hi. Thank you for the opportunity. You've launched about 11 products in the third quarter. Overall, over the last 2 years, you probably have about 30 odd products launches, and typically you've said that you gradually build up market share. In how many of these that you've recently launched is your market share still suboptimal where you think you can go up?
So, Chirag, so in this, the way I'd like to answer this question is that what I've always said, that it's not always a question about market share. It is a question of what price you get in the market. Just pure market share doesn't make sense. You don't want to burn up your capacities only to sell at cents, So it really depends. If we don't have a target market share that we get into, we want to see where we can make the most money. And I think when we approach it from that, yes, there's some products where we're a little lower than the market, but I do know that as time goes by, we will get opportunities in them. So, but you're right, we do go a little slower. So I think I don't have a figure for you. We could do better in some products. It depends on what price.
Understood. And this $57 million a quarter kind of a number that we've done, is it like absolute base, Pranav, or is there still anything which you fear can be lost, in terms of pricing, etc.?
So I think with the US, what happens is I think this is the new base. See, there's no sartans, there's no huge chunks of that in the business anymore, right? I mean, you get few small one-time opportunities which you get every quarter, so that continues. So it is the base, and okay, if it is on a even keel moving forward, yes, and I anticipate this would be the new base, or 50, 54, 55 could be the new base. But I can't predict that because it really depends on the next guy. Some new incumbent comes and decides to drop the prices even further. Then we may walk out of the business. We may say that it doesn't make sense with the penalties to do it. So as of now, yes, this is the base, it seems.
Understood. And from an environment standpoint, Pranav, any new thoughts that you have, for the U.S. market in terms of what's changing, whether we are better placed, or do you still continue to think that, good question, Chirag. I think, as I said I think the U.S. market is looking a little better compared to where we were a couple of years back, 2 years back, a year and a half back. It is looking a little better. There is still, I think, supply, being a good supply partner is still valued in spite of the price erosion that you see. And it's just, I think we have all the items in place, all the things in place, be it the front end, which looks for opportunities, the back end, which can respond to the opportunities. So I think it's looking a little better, the U.S. market. Having said that, the returns are down compared to what they were 3-4 years back, hence a lower R&D spend on the U.S. side. Understood. Have we got any long-term contracts, Pranav?
In the U.S. generics?
Yes.
No, we haven't gone into any of that because we're looking at it to see if it makes sense. While principally a long-term contract would make sense, but I think one must read the fine print, and we're evaluating those if it makes sense for us.
But so competitors are getting long-term contracts. You are still evaluating. Is the way to think about it?
We have evaluated it. I don't like some of the fine print, hence I haven't jumped into it.
Understood.
Perfect. This is helpful, Pranav. Thank you so much. Best of luck.
Thanks.
Thank you. The next question is from the line of Tushar Mundane from Motilal Oswal Financial Services. Please go ahead. Tushar, your line is unmuted. You can please proceed with your question.
Yeah, am I audible now?
Yes.
Yeah.
Sorry for this. So just on the US business again, like at this base business of $57 million, so would we be profitable or like at a break?
No, the US is profitable for us.
So in the pecking order, of course. So domestic would be being a legacy business. I'm assuming it would be in the range of 25% EBITDA margin. But overall, we are at.
We don't give a breakup. So we don't give a breakup of EBITDA margins. I don't think we've ever done it. So.
All right, sir. Thank you.
Thank you. The next question is from the line of Mr. Bharat Celly from Equirius. Please go ahead.
Yeah, hi. Thanks for the opportunity.
Sorry to interrupt. Mr. Bharat, your line is not very clear. If you are using the speaker mode, may we request you use the handset mode?
Is it better?
Yes, sir.
Yeah. Hi, sir. Congrats for the good set of numbers. Just wanted to understand on US generic. So have seen any growth in the base volume, base volume?
On the volume business side, yeah, the US, yes, we are seeing an increase in the volumes of the business that is there. I think on a 9-month basis, we're definitely up compared to last year.
Okay. And since you mentioned that you are still not clear on taking a new NBO, so new contract, so what is the particular reason for that? Is it the pricing part or
No. Sorry. So let me just backstep a little bit and to the question that Chirag asked earlier. What is happening is that some of the buyers are trying to get into a long-term contract. Right now, in terms of long-term contract, a lot of them have approached us. We are still evaluating and we're still negotiating with them because one has to read the print, right? I think as a company, we have to see in the long run what is beneficial for us as a company and where the liabilities could be. And that is why we're just waiting and watching. We don't want to jump into it as yet.
I get it. And when we talk about US market, how do you see from the new launches perspective, when you launch a new product, what sort of price erosion you see? Whether the price erosion for the incremental new products are very high, how do you see it?
I think price erosion is tough to say. It depends product to product. So an incumbent may come and we've seen one product recently where we were there, the market was settled, a new person came and they dropped it about 40 to 50%. So you can see that kind of erosion also. But generally, it really depends. It depends on who the competitors are, what the volumes are, what the shares are. It's very tough to comment on that.
I get that. And Baheti sir, actually we have seen almost like 20 crore incremental effect frequently. So just wanted to pick your mind whether there has been some OPEX optimization measures which we have taken back to this or there is something else to reason.
So I didn't get your question because your voice is also little it is cracking up, but what did you say?
So I'm asking, X of our R&D expenses, our other expenses has actually gone down by 20 crores sequentially. So is it because of some cost control measures or there is something else which is leading to this? And how should we see it going forward?
No, I don't think so. I think, everything is normal in business. I don't think there is any particular reason for any impact. Maybe in pharma Q2, Ajay can confirm. But in pharma Q2 always has some higher promo expense than Q3. Probably that may be the only differentiator.
I think, Mr. Bedi, the other thing is on there's a little bit of saving on the RM and the sourcing side. I think that may be reflected here.
No, that again coming to the other expense. That comes to the GC.
Yeah.
So GC
goes.
Yeah.
Sure. I will get back to the group. Thank you.
Thank you. The next question is from the line of Vishesh, who's an individual investor. Please go ahead.
Hello.
Yes, sir. Please proceed.
Yeah. So thanks for the opportunity. And first of all, congratulations for the good set of numbers you've achieved. I've got two questions here. First thing, could you please quantify the overall revenue from your new facilities, like in a whole for, let's say, Q3 of financial year 24?
No, we don't give product-wise details or the facility-wise details. That's very difficult to provide.
Okay, no problem. And okay. And sir, when can we see a good operation kicking in regarding the new facilities?
I don't think question is clear to me. What are you saying?
Like operating leverage.
Yeah. So what is the question?
So you're saying when do we expect to see operating leverage in the new facilities?
Yes. When can you see?
So I think someone earlier asked a question about capacity utilization in the new facilities. Now the new facilities are all operational. The capacity utilization right now is pretty low. And what I meant by operating leverage is as we go along, right, and as you have more product coming out, you have more opportunities, and that will raise the operating leverage. Your cost will come down, your unabsorbed overheads will come down. That will help operating leverage, and which would ultimately reflect on the margins of the company as well.
Okay. Yes, thank you. Thanks a lot.
Thank you. The next question is from the line of Rishabh Dugal from FinoWealth Financial. Please go ahead.
Hello. Congratulations, sir. So I have just one question. So what's your view on the US business? So will it be product-based or number-based going further?
Sorry, I was just. Can you just repeat that question? I couldn't hear.
Am I audible?
Yeah. No, you're audible. I had an issue with my end. Can you just repeat it, please?
Hello.
Yes, Rishabh, your line is audible. Can you please repeat your question?
So yes, my question is, will the US business will it be majorly driven by better product mix, or what will it be?
So I think the US business, what will happen is as you get as you have a broader portfolio, as you have more products getting into the market, that will help. One of the reasons why we made these investments into new capabilities, such as injectable, derm, peptides, oncology, is the incremental competition there is much lesser on the OSD side. And also on this, as you go towards more complex products, you will hopefully see lesser price erosion and bigger product opportunities. That's the way we're approaching the US market.
Right. Understood. That's all. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. R.K. Baheti for closing comments.
Thanks. As always, it's a pleasure to interact with all of you, and we'll continue doing so quarter after quarter. Thank you very much for joining again, and see you next quarter. Thank you.
Thank you. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals Limited, we conclude this conference. Thank you for joining us.